All right. Hello, everybody, and welcome back to another episode of the Wealth Building for Dummies podcast. My name is Kyle Demian. As always, I'm joined here with my co-host, Renji Matthew. And on today's show, we're going to be talking about assets and what an asset is and how to create a cash flow cycle that will help you reach financial freedom. So with that, we're going to be talking about different types of assets. And we're doing this podcast today because in the next few episodes, we're going to actually be bringing on guests that have experience building their own businesses. And we're actually going to have a few different guests come on that are investing into different asset types. So we tend to talk a lot about real estate, but we found some people that own other types of assets. They're going to be sharing their experiences, how they've built and grown and scaled their businesses with you guys. And so we figured that this show, before we bring them on, would be a great precursor to setting the stage for what they're going to talk about and how and why it works. So with that, Renji, is there anything that you want to add, or do you want me to start sharing the screen and we can start going through that together?
No, go ahead.
And did that come through okay?
Yep.
Okay, cool. So first, we need to define what financial freedom is. And Renji, take us through that. What is financial freedom based on the equation?
So what we like to say, financial freedom is passive income greater than expenses. So what does that look like, right? We talked about on previous episodes about knowing what your numbers are, but we don't ask how many years till I can retire. What we like to ask is how many assets can I acquire, right? So your financial number is what is your expenses and how much money can I make passively that will cover my expenses? Because financial freedom to us is if your passive income is greater than expenses, you are financially free. Now, building wealth is just multiplying that as many times as you want, right? So we'll talk about assets and how, let's say we use examples and what it would look like to be financially free.
And that takes us into then defining, what is an asset and what is a liability. An asset is simply something that puts money into your pocket. It's something that has value and can be turned into money. A liability is everything else. That's what you owe to others, like loans, bills, taxes, or things that just aren't putting money into your pocket. So you can think of maybe cars, clothes that aren't necessarily needed, luxury clothes, luxury shoes. I say that because I've been down that path. I used to buy Jordans and sneakers and flip them. But in my past, that was a business that I had, but I also got caught into the whole business culture where you wanted to buy clothes and shoes that were expensive and that were not necessary as well. So those were liabilities. I wasn't investing into assets. So when we're talking about these things, Renji and I have launched businesses that were failures. We have launched businesses that were successes. And so we a lot of times speak from our experiences and what we've learned, right? And then what are some examples of assets then? If we want to acquire assets, where should we start? And Renji, let's I'll have you take them through different types of assets for us.
Yeah, so in this example, you guys see real estate is the first thing because we love to talk about real estate. Then you see ice machines, car washes, vending machines, laundromats, parking lots, and storage units. So most assets, especially these, it's not only valuable for you as an owner because it's bringing you passive income, but it's also providing value to the customer that uses it, right? Because there's a lot of different types of assets out there. Some bring you money and it doesn't benefit others, but the ones that we like to talk about, they actually benefit both people because these are all assets that bring some type of value to the person that's using it, right? Parking lot we've talked about once before. If you've ever gone to a major NFL or NBA game and you're trying to find parking and they don't have a huge parking lot, let's say, right? In Oklahoma, I think the highest I've seen is $25 for the night. But I know I've talked to family members and friends in other states where they've had to pay up to $50 and stuff just to park, just so they can go to the game, which they probably paid high ticket for the game already. Now they have to pay for a parking lot too, right? So it's providing value, even though they might not want to pay that, but it's a value for them. and it's income for you. So like Kyle said, an asset is something that has value that brings you income, but this also provides value for someone else. You want to add anything to that, Kyle?
No, nothing I wanted to add to that. You did a good job of taking us through that that example. And then that leads us back to, okay, so how do we get financial freedom with those assets, right? And first you need to identify what your monthly expenses are. So let's say that in this scenario, your monthly expenses are $5,000 a month, right? So for financial freedom, how do you get financial freedom if your expenses are $5,000 a month? You need passive income that's greater than your expenses. You need passive income of $5,001 every single month, and then you're financially free, right?
Yep.
So let's say that one asset brings you in $1,000 a month of passive income. All you need is 6 assets, technically, to be financially free. 6 assets that all pay you $1,000 a month each. Now your passive income is greater than your expenses, and you have financial freedom. So how do you do that? First, you need to figure out and establish how much that you can save, right? Once you've established that, you're going to want to store it into something that is going to allow your money to grow and compound, and then follow the 5 pillars to consider whenever you're putting your money anywhere. And what are those 5 pillars? Those are safety, liquidity, rate of return, taxes, and fees. Safety, how safe is my money? Liquidity, how liquid is my money, or how quickly can I access it? Rate of return, of course, anytime we're putting our money anywhere and we want it to grow, we have to analyze what's the rate of return. 4th one is taxes. How are taxes going to affect you? Is it going to be taxed every single year? Is it going to be tax deferred, or is it going to be tax free? And then lastly, fees. Price is what you pay, value is what you get. You're not necessarily looking for the account with the lowest fees, but you're looking for an account, if it does have fees, what extra value or benefits does it provide for you? So it becomes like an analysis necessarily, right? We're okay with fees if it's going to give us a greater benefit in the long run. But those are the 5 pillars that we analyze. That's where we determine where we should stash and save our money. Once we've built up enough to go and acquire an asset, guess what? Then we go get our first asset. And then what happens from there? We make extra money with our asset. We take and save our profits. We, once again, figure out how much we can save. We go and stash it again, and then we go out and acquire another asset. And this is what creates this perpetual, never-ending cash flow cycle, right? Renji, anything that you want to add on or go into on that?
Yeah, no, like if you're storing money, it's something that a lot of successful people talk about. A lot of the books that we read, they always talk about paying yourself first. And this is what you would be doing when you put money aside. Let's say if it's for retirement or for buying assets, you're paying yourself, right? You're taking that, you're growing that stash. Now you want to make sure you put it somewhere where you have that safety, liquidity, rate of return, all of that. Most people will put money into their bank account, which is not a bad thing. Especially if you have a high yield savings account, you're going to get some returns on that. And once you have enough, buy your first asset. And when you were talking about that, it brought a meme I saw a couple of days ago where it wasn't a meme, it was a video where the guy was holding a backpack and he said, what's the difference between the way rich people look at money and the way poor people look at money, right? And something he said was like, okay, if I told you this, you have to give me $1,000 and you can have this backpack, what would you say? And he said the difference between rich people and poor people is poor people will say, I'm not buying that for $1,000. But rich people will say, what's inside the bag? Because what if the bag had $100,000 in it? The rich people don't care about how much money you have to spend on something. They look at what the rate of return can be, because that's how they're making their money work for them. So yes, you might think, oh, buying these assets, it's not cheap. That's right. But what is the opportunity cost you're missing out on? You know, if you're not saving to buy assets, what opportunity costs are you losing, right? So that it just went through my mind when you were talking about saving, stashing, and buying assets.
I love it. And that was a great analogy because just like you said, it paints a picture of the mindset that separates the poor from the wealthy. You know, not necessarily always looking at the cost, but the value that comes from anything. Right. And so with that, I can stop sharing my screen. But later this week, we're going to have, or I guess next week, because at the time of this recording, it's Friday. But next week, we're going to have on a guy that's done a lot of stuff in vending machines. Right. So most people think that, you know, it's when it comes to owning assets, they mostly only think about real estate. You know, that's what we've done a lot of our podcasts on and brought on a lot of guests too. But people can also, do stuff like vending machines, car washes, laundromats, and so on. But what you're looking for is essentially a business model or an asset that is going to allow you to collect payments from other people. Once you do that and your payments that you collect are greater than your expenses, then congratulations, you have a business and an asset that's producing you cash flow. Right. With that, Renji, anything else that we should end on for today's podcast? But I think this one will keep short and simple.
Yeah, and one thing you hit on was mindset. Mindset is everything, guys. Like we said before, if you're trying to save for retirement or you're trying to get into assets, both are difficult, but you got to pick your path and which one you want to go down, right? And no matter which it is, you have to get your mind right, because it's not something that's quick and easy. It's not a quick scheme, right? You're looking at the long term over time. How many years is it going to take you to save up so much to live off of that retirement account? At the same note, on the other side, how many years is it going to take you to buy enough assets to live off of that passively well in retirement, right? So which path do you want to go? Read a lot of books, listen to a lot of podcasts that help you build your mindset, because our human nature is to be negative easily, right? We can easily be negative. We can easily put each other down, but that's not what we're here for. Build your mind up, and then whatever path you go, it's going to be successful. Believe that it's going to be successful, and take your action. Because you can know all the knowledge, you can have all the wisdom and knowledge in the world, but if you don't take action, you're not going to go anywhere. So take action, whichever path you decide to go through.
Yeah, knowledge isn't power. Applied knowledge is power. Using the knowledge is what's powerful. So with that, thank you guys for tuning in. As always, make sure to like, comment, and subscribe. And leave your comments below for what we should chat about in the future. We do read our comments and want to hear from you guys, and we want to know what you would like us to cover. And with that, we'll see you guys on the next episode. Have a good one.